Good morning, Wall Street winners. It is Friday, July 26th, and we are seeing green across the screen in all three of the U.S. indices. It looks like we're in for a bit of a recovery. It's 8:34, 8:35 Eastern Time. We've just seen U.S. PCE, core PCE numbers come in, basically matching estimates. The summary here is that the economy appears to be slowing, but not really slowing towards a recession at this point, just slowing down, bringing inflation down steadily, but there's really no urgency for the Fed to cut rates. So the likelihood of a July cut, I'd say at this point, off the table. I think an August cut is probably off the table, and we're likely leaning towards what is still predicted to be the first cut for the U.S. Federal Reserve in September, but we'll see what happens out in Jackson Hole with the Jackson Hole Summit that takes place in August in the coming weeks, and the Fed speak coming out of that. You can see here at NASDAQ futures at the top up 220, so the sector that has fallen out of favor temporarily. Looks like it could be catching a bit of a boost today and a bit of a comeback. But if we look across the board, I mean, the main theme out of earnings season thus far is that spending on airlines is down. Almost all airlines have been hit in this quarter, and spending is off. We're seeing spending at high-end retailers off as well. And some of that maybe just due to a shift in consumer spending and a focus on more essentials as opposed to premium goods and wants over needs, but also possibly a slowdown in Chinese consumer spending because the economy still really hasn't started to pick up over in China. And there's a great deal of Chinese consumer spending that occurs when that economy is heating up and stronger than it is currently. So if you're looking at a retail play, you probably want to look at a Walmart, you want to look at a Costco, you might want to look at a Dollar General, you want to look at good, solid retail companies that have the ability to market to the low-end consumer and the middle income consumer. You probably don't need to worry if they're marketing to the high-end consumer. They're going to spend anywhere. And then you could look at strategic niche players that only focus maybe on high-end needed retail. So not wants retail like handbags and designer clothes, designer shoes, but things that maybe like specialty food shops or something of that nature, specialty retailers in a niche. Anyway, I'm not focusing on that. I'm just suggesting that if that's where you're interested in focusing, that would be where I would pay my attention to. Next week, we have Humana come out in the healthcare sector, so 5 days from earnings there. Looks like we're up pre-market. I think we're going to see Humana get up into the 420, 430 range based on earnings. We saw positive earnings come out of HCA earlier this week, and it had a nice jump on Tuesday going from here we're at the 324s up to the 342s. I think we're going to see a similar bump, and then it continued to climb. I think we're going to see a similar bump with Humana because I do expect them to start recovering from an earnings perspective. If you're looking for a long-term play in retail, though, I do like Nike. I think Nike at $71, this is a $100 stock only a few months ago. And I think that it's a stock that will climb back and recover, and that's a 30% gain if you wait for that to get back to 100 at this point. So if you want to hold something for, call it 6 to 12 months for 30%, I think Nike could be a very strong purchase at $71 right now. JB Hunt is one that I would be shorting right now. And when you short a stock, you're basically borrowing against somebody else's holding, anticipating that stock to go down. The challenge with shorting is there's a lot of risk in it because you have unlimited exposure on the downside. So if you're a new investor, shorting is not something you want to get involved in. But it's similar to the concept of buying a put. When you buy an option that is a put as opposed to a call, so a put option is based on your expectation that the stock price will drop over a period of time. And there's an expiration date on that option, usually on a Friday, and you pay a premium for that option to buy that option, and they're sold. Each singular option represents 100 shares of that stock. And worst case is at the option expiry, you have to buy the stock, or you buy it early to clear your position and close out that position. I think JB Hunt is going to go down. I don't know why it's back up to 171. It looks like it's off pre-market today, but this is a stock that had bad earnings, bad results in this current quarter, and I think it's going to continue at least into the inevitable future. Oil had a great day yesterday. Most of our oil stocks were in the green. It looks like even though crude is off today by 39 cents currently, all the oil stocks appear to be in the green. So that's an interesting move forward and to the upside. Valero had a spectacular day yesterday, off of strong earnings. Actually, off of weak earnings. I should correct myself there. They didn't have great earnings, but what am I saying? Oh my goodness, I'm all mixed up today. They did have good earnings yesterday, and they had a good bounce off of those earnings. I predicted that earlier last week and going into earnings, and my apologies on that. They had positive earnings yesterday, and I think they're well positioned to continue to grow and get back into the 170, 175 level in this quarter as we lead into their next quarterly earnings. So we'll keep an eye on them. We get down to tech. Tech is booming. NASDAQ futures are up. Everything, for the most part, looks like it's in the green, but be careful here. I would be a buyer right now of CrowdStrike. CrowdStrike fell after that global tech outage that it was responsible for. It's still catching a lot of heat in the media about that. Its CEO was sent to Washington to talk to the politicians, blah, blah, blah. But the base case here is it's a strong company, and it's probably set to recover a little bit at this point now that we're through the crash, the tech meltdown, and it is put out a fix. Companies are back in business, and things are working as expected. So it looks like it's up for a bit of a climb today. That would be an interesting one to keep an eye on because it should get back into the 300s within the quarter, I would say. They're probably going to have some bad quarterly results, so I wouldn't hold it through the quarterly results. They're probably going to see sales and revenue down because it's harder to close deals after that outage. But it has the likelihood to have a bit of volatility on its way back up over the next 2 quarters. CRM is on a bit of a comeback here. It had a great day yesterday. It looks like it's set for more of a comeback today. This is a stock that has been hit in the last quarter, but I do believe it's on its way back up to 300. If not north of 300 to 330 by the end of the year. We've got Net, which is Cloudflare, which is a competitor to CrowdStrike and to Palo Alto. It's had a good day yesterday. It looks like it's going to have another good start to the day today. I really like Microsoft right now, having dropped 1050 yesterday in the 418 to 420. Range with earnings coming out next week. I think that there's a lot of positive momentum behind Microsoft. I'm staying away from ARM, even though it's down in the 150s today, having dropped significantly over the last week or so. It has a ton of volatility and movement to it, so there's definitely a lot of opportunity there, but it is a risky play in my opinion, so I'm staying clear of that. I have been putting some money yesterday into Google, so I was fortunate enough to make some money after earnings release in the pre-market on Google. I've got a short video out on that on the channel if you wanted to take a look at how that was done in the after hours. But now that it's come down for 2 or 3 straight days, I think it's an opportunity to buy in here. I think this is going to get back up into the 175 range. We saw a weird blip yesterday in it. If we look at the chart, and we take a look at yesterday, you can see that at the beginning of the day, Thursday, it bottomed out. Then it came to like a tabletop, and then it bottomed out again towards the end of the day, and then dropped further into the close. So I think it's likely it'll get back up into the 171 range today. It could get back up into the 174, 175 range as it starts to rebound a little bit with the NASDAQ up as much as it is. Adobe is also doing well over the last little while. It's climbed back from the mid 400s. It's now up into the mid 500s. I think as we move into earnings season, which is still a ways out, I mean, they don't report until September at this point, we're going to see some positive movement and traction in that. And then financials. So there's been a sector rotation, and we need to be aware of sector rotations when we're looking at markets and investments. And you have to be aware of where overall your portfolio is percentage-wise. You don't want to be in just one sector. But it is good to rotate sectors when money rotates sectors. And right now we're seeing some rotation into financials. I think we'll see more in August as we roll into a likely September rate cut. And all of that is likely to bode well for financials. So I am still a lover of SoFi. If you got into SoFi yesterday at the beginning of the day, you would have done very well and been up about 3%. If you want to get into that again today, I'm not sure I would get in at market open. I might wait till Monday on this one if it's going to be up in the 740, 750 range for a bit of a pullback as we move forward and have some earnings next week. RJF had good earnings this week, and it popped from the 112s. It's now up to 118. I was in that at 112 and out at 116, so that was a good play, buying just before close pre-earnings and then selling the following morning on the pop after earnings had been reported the previous afternoon, and the market was excited about what they were hearing and what they saw. Other ones that I think you'll do well in over the course is JP Morgan. 208, it's on the richer side, but it's got some momentum to go higher. Morgan Stanley at the 103, 104 range, still a strong purchase. I think it's got momentum to get up to 110. It's definitely a strong financial. And Goldman as well, making a $5 move yesterday. Looks like it's going to do about the same, maybe better today. One of the ones that I bought, and I'm still in the red on this one, is Charles Schwab. I bought that at 67, so it looks like as it opens here, based on the pre-market, I may go back into the green on that. But I bought it after earnings, and then it dipped a lot lower than I had expected, getting down to the low 60s. But I held that, so it's more of a swing trade than a day trade. And I do expect it to get back up into the low 70s, and I'll take my profits at that point. And then finally, you've got some of the Canadian banks. TD, slow to recover. Interesting here. I mean, if you look at TD and compare that to M&T Bank, it's really bigger than M&T Bank, and it has a lot of similarities with that, but its valuation is so much lower than an American bank, being that it's viewed as a Canadian bank, even though it owns a significant chunk of American banks under now the TD brand. I think TD is a good investment going forward. They've struggled, obviously, with a number of things. We're in a worse economy, I'd say, in Canada than they are in the US, and TD itself, is one of the big Canadian banks, has struggled with some anti-money laundering issues, but it looks like that's kind of starting to get put behind them, and I think it has the potential to get back up to $90, certainly before the end of this year, which could be a nice 10% or greater gain on that. So that's where we are today. Good luck in your trades.